token and product are completely different things. Because if you have a very good product marketing company, you have traction users, it doesn't mean that these guys will come to your market and start trading. So you don't need to mix these campaigns for your marketing. You need to separate one and make a proper good one for your token. Pay attention that a lot of loan market makers can be like investors to some projects, but it doesn't mean that they can be like the market maker in this market. So check the real cases when they played a role as a market maker. It's better if you like a founder put your energy focus on trying to make the best marketing campaign rather than like trying to implement the very small feature that will create demand like somewhere sometime later.
A big welcome to everybody. This is really the first time that we are putting out this sort of content from Legion. So we wanted to make sure that we put out information that is really hard to come by, because it's the kind of things that the only people that actually know it are the people that are on the ground and doing it. And so we're going to kick off this sort of TGE playbook series with market making. We've invited an awesome guest who works with a bunch of Legion projects, a bunch of other projects, has been working on the inside as a market maker in the past. So obviously, I'll kind of let you do your own intro. I've started to refer to you internally as Market Maker Mike, just because of the nice alliteration there. So
Yeah.
yeah, I'll hand it over to you. Maybe you want to start off just with give people a little bit of a background in terms of like your own market making involvement and what you're doing now.
Of course. So first of all, nice to meet you, everybody. Thanks for inviting to me for this space, Robert. So thank you. A little bit about my background. You're absolutely right. So I have some like experience in the past on working closely to the market making. I've never been like as a trader, but I've always been related to and I'm kind of near all of the things. So that's why like this is my main expertise coming from. But mostly I'm not helping only with market making as advisor. So my main role is to help project with the whole go-to-market strategy for their token. And it starts far before the market making stuff comes by. All of the marketing stuff, choosing exchanges, finalizing all the
Yeah.
strategy. And of course, one of the biggest and important parts is like when I work with a client is to choose market maker and we need to manage it. So you're absolutely right. Market making is some part of what I'm advising, explaining to the projects when I'm working with them.
Yeah, awesome. And to your point there, this is also what we want to do from Legion side, right? It's not just about like this very narrow piece of the whole thing. Like crypto launches or token launches are very complex, and there's multiple moving parts. So we're definitely going to be diving into some of those other aspects that you mentioned in other pieces of content, right? Whether it's the sex listings or what have you, or the working with KOLs or whatever the case may be. But yeah, today hyper focused around market making. I do think it is one of those topics that, uh, you know, for many crypto founders, it's like launching a token. It's kind of like a wedding. You really only want to do it once, like in many cases, right? Like that's your goal. And so by definition, you sort of like have no experience, right? So there's all these sorts of things that I think founders are unaware of. And just talking to you a bunch of times and kind of like working on this article, I've learned a lot about market making. And I also have friends that have launched tokens that, in fact, this was something that was happening at the same time as I was working on this article. This guy told me, I'm not going to mention the market maker by name, but basically he got screwed because he didn't know all of these things. He didn't know the different models, and yeah, he ended up having a very bad launch essentially. So I think also one thing that was helpful for me to understand with market making is like there are some things that you can do that can really like help you win. And then there are some things that you can do where the goal is not like to like 100x your business. It's like to make sure that you don't die. It's to make sure that you're not crushed by making some mistake. And I think that maybe you can help explain how market making kind of falls into this bucket. Like, what is it about market making that makes it so important as it relates to not, breaking your project?
So first of all, you're absolutely right that project have only one chance to make a good listing. So there is no second chance, and you're making so much betting on this one day. So if one small thing can be like not prepared well, it can actually ruin everything. So that's why you're absolutely right that founders need some like additional external help just to explain them how everything works, so they can make the right decision and not to be in the situation as unluckily your friends that we wish we knew it before. So this is exactly why we prepared this document together, and this is exactly why we need to explain some very important basic points. So founder, when they're making decisions like further, they know the which how to make a decision right. So first of all, answering your question, so what we need to understand, the market making, it's not an option to have or not. It's just what we definitely need to have to make our listing successfully. So there is a lot of details like how to choose a market maker, what models. There is a lot of details, but one basic line is that we definitely need a market maker to work with. So what happens if we don't have a market maker? Our market will be not attractive and not be healthy for our traders. So traders won't be able to execute trades. So it will be not enough liquidity provided on a trade. It will be not. It will be huge spreads. It will be huge spikes when the trades comes. The prices for the spikes will be not fair. So, and like traders that actually might be attracted to a project, interested in a token, they will see the market and they will not join it. Or if they are already trading, if market maker leaves the market, traders will go away the same way. So that's why we just need a market maker to have liquid, healthy market, so we can keep our traders on it. If we don't, it will, as I mentioned, it will scare away not only retail traders, but most importantly, it will also scare away all institutional participants that we will work on our markets. And as a consequence, all major exchanges right now ask you before the listing, what market maker do you work with? So they want to see that the project knows it, that they need a market maker, and they're working with trustworthy counterparties that can provide enough liquidity depths to their market. They can keep tight and spread, and the users of exchange will have enough opportunity to participate in this market.
Yeah, awesome. And so that's kind of another thing that I've learned, right? It's not this if question, right? It's like if you want to be taken seriously, this is a must-have. Essentially, we've all seen those ghost town charts, right, with the candles that just like there's no activity at all. And I think just optically, when people see that, they should understand that very possibly that token is not, very serious because they clearly don't have a market maker. Um, I think another big thing for me was kind of understanding again, this is the whole market making side is sort of a black box. So I think a good starting point, and correct me if I'm wrong or if you want to start somewhere else, but there's two different market making models. And I think it's very helpful for people to understand those different models. And maybe we'll dive into like which one makes sense for what type of project a little bit down the road. But yeah, that'd be a good starting point, I think.
You're absolutely right. There is like may of course there is like each market maker can find there is some like unique model, but in a very high level there is like two main groups of models. It's loan type, mostly like call option loan model, and second is like retailer market making model. So let's just go through what each model looks like, and as I remember, we need a little bit later to discuss benefits of each one, how to choose like which project, which model like of it. So it's a little bit later, but on a very high level, like low. Let's start with the loan one. So it looks like this: your project loans a large amount of like your native token of your project to the market maker. Usually for some fixed terms, it might be like 12 months, 2 years like contracts. In return, the market maker provides you like their own capital for liquidity. Typically, it's like USDT pair, or it can be like VBNB or like VETH on DEXs. So how it works? Uh, you provide a loan. Loan market maker receives the tokens. They have a call option, so they can they can buy a token with a fixed strike price, or they can return your tokens back when the like contract ends. In return, they are like provided their own USDT capital, as I already mentioned, to meet all the requirements of the exchanges, to provide enough liquidity on your market, to keep your order book with a good depth, to keep spread tightened. So they are like provided on their own everything. Uh, but there are very unique points that you need to understand about this model. So because it's more like a loan contract, the market maker make all most of the decisions connected to your market on their own. So they will not provide a very, like open communication with your projects. They will not jump on a calls every 2 days discussing, looks, what's happening, explaining what's happening in your market, suggesting some steps, like what will, no, it's will be no open communication. I always advise or I always explains to my clients that you need to understand that market maker is a business. They have own main goal to maximize their own profit from your like collaboration, and of course they will be like prioritizing their own profit rather than just like supporting your long-term interests or reputation. It's very very high level like main idea that you need to understand about this market maker. Of course, I'm not telling these guys are not trustworthy. It's institutional companies, but first of all, it's like a business that is aims to make money. Just to summarize, like the main pros advantage of working with them is that you don't need provide enough liquidity from your treasury to support all the exchanges. These guys will cover it on their end.
You just give them your token, right? Your native token.
Yes, but they decide on their own what they can do or not do with these tokens, so you can't affect that much this decision. And that's why we have like a second retainer model. It works a little bit on different. So you provide all USDT and tokens from your side. So the market maker not providing any liquidity. They just more like you can understand. You just hire some in-house trading desk or like some consultant company to work on your market. So they will ask you like some like fixed fee, retainer fixed fee from the service they provide. But this is like how they maximize their profit. So they're not interested like in other actions from your market. Of course, as mentioned, it's a very high level. Every contract can be unique, but their incentive is more to go together with you. So they are more interested in your projects to succeed. They're more interested in your reputation, in your long-term goals, because it's their job. Like they are paid because they need to give you like a good advice, explain what's going on in your market. So very high level, as mentioned, they are very, and of course it's like regular communication. If we compare it to the loan model, weekly, monthly, like strategy calls. So everything you need to discuss, like tactics, what's going on, what's like probably new trends coming up on the market. So these guys will like help you with all of it. Uh, so this is, I think, this is the main two difference between two main models of market making companies right now.
Yeah. And so if I were to summarize, and you can see if I get it correctly. So you've got the loan model. The beauty there is you just supply your own token. You don't have to provide the liquidity. And so I think with that, that becomes a very attractive offer to people for that reason. But the downside is that the market maker is sort of 100% in charge of the decision making. They don't really care as much about what you want. They're a business, like you say. They're going to want to try to maximize, their own profit. And then you have the retainer model where you're going to be paying a fixed retainer. Maybe there's like other incentives too. I don't know. But then you're sort of hiring this, agency essentially to come in and trade on your behalf. But the downside now is you're paying a retainer, and I suppose you all sort of supplying the liquidity itself for the trading, right?
Exactly. Exactly. So everything
Yeah.
correct.
Okay. So I think the one thing that I struggle like I think that's pretty easy to understand, and what I think is challenging to understand is like if you just talk about these two models like we just did, it sounds like yes, I understand that it's a little bit easier for me to just supply tokens, and that's like an easier way to get started, but it also sounds like the loan model is just not a good model, but I don't think that's necessarily true, right? It's a very nuanced decision. So can you help shed some light on like when does it make sense to have a loan market maker? When does it make sense to have a retainer? When can you maybe have both? So maybe let's talk about that a bit.
Yeah, so you actually make a very good point. There is, and I want to highlight it. There is no good or bad model. So I'm not trying to convince that like one or another model is better than others. Actually, it's hard to compare them. So they all have their advantages and disadvantages. But the main thing here is depends on what the project needs. So each project, each token listing that, for example, I help to prepare with is very unique. Project have very unique specialties, very unique goals, and that's why we need like to make focus more on some advantage or disadvantage of some like loan market maker. And just like taking into account all these like specialties, we sit together with the team and discuss, okay, in this situation we will need this type of market maker, so we need to focus on like looking for this type of market maker. And let's actually like probably me a little bit give more details. What's points do we usually look for at when
Yeah.
we are like choosing the model for our like project? So I think the main ones are high like FDV. So
Yeah.
we just like trying to understand like our FDV like is good for retainer or loan model. On a very high level, the higher FDV you have, the more liquidity you need to provide for like exchanges. So like the higher FDV, the like if you're like a big FDV project, most likely you'll need to work with a loan model because these guys will provide quite a lot USDT from their like treasury to provide liquidity on your market. Same comes with like major exchanges listings. So if you have like Coinbase, like Binance, OKX spot market, I don't know, Kraken, even Bybit, in my opinion. So in these situations, most likely you will also need to work with loan amounts because these guys have really high requirements for liquidity on their market. And then there is like other points that we also look at is like strong institutional backing. So if you have very strong institutional backing, most likely you need to go with somebody who's very regulated. And is most of the situations it's like a loan type of market makers. And a lot we also focus on, you know, like in-house trading experience of the team. So if the team has a very, because if you're working with a retainer, most likely you need to be quite involved in what's going on in your market. If you don't have enough experience, for example, on the market side, it's better to work with like loan amount because they will be more independent and they can make decisions on their own. If you don't have this experience, you're working with a retainer, you might make some very wrong decisions, and the market maker will just like follow them. So that's why this also very important point when we look at when we are making the decisions what type of market maker we are going with.
Okay. And something that I've asked you in the past that I think it's difficult for you to give a very specific answer because I think mainly because the market is always changing. But I think in terms of trying to give people some sort of a guidance when it comes to like the FDV question, can you give us any sort of range of like what FDVs are we talking about when I should be looking at a loan model instead of a retainer model, for example? Can you give any guidance there?
So yeah, it's a very tricky question actually.
Yeah.
So it's a lot depends. Of course, when we're talking about the market, FDV, it's just like the potential number of tokens that will come by. So it's very important how much tokens like is circulating supply right now. So how much tokens we have right now on the market. But usually, I think we start thinking about, I think from 70, 100 million FDV, we start thinking like, do we need to have a loan type of market making or not? So I think this is like probably from 50 million. This is the moment when you need to start thinking if it's like a good option for you or not. But again, it doesn't mean that if you're like higher than not 50 million, lower than 50 million, that you don't need it. So like each case is unique, but just taking into account the FDV, I would like start thinking from 50 million FDV if you need it or not.
Yeah. No, I'm sure that's helpful for people. Another thing that you talked about is the idea of having a second market maker, right? So maybe you can talk about that when that makes sense. What does that mean? If you already have a loan market maker, does having a second market maker always mean that you're going to get a retainer market maker, or does it also make sense to have a second market maker that is using the same model that you had for the first one? Um, yeah, maybe you can talk to the idea of the second market maker when that makes sense.
So it's a lot depends on which types we are speaking about. So like if we're talking about two loan strategy, I think it might be uh, like a good idea in some situations because it will like help you to diversify the risks between two market makers or many. So like I've seen the cases when there is like much more than like two market makers working on some project. It also will help them to create some like competitive tension between them. It also like will be a good idea like to get better deals from them if you're working with two of them. So yeah, I think in some situations it might be like a good idea to combine different companies to work with together. If we are talking about like loan and retainer model, it might be also a very good fit because like as we discussed, each model have like pros and cons, and like just having two of them, it will give you like some kind of like a balance. It will like strengthen their advantages of both models, and it will cover the weaknesses of each model too. So it will give you like a little bit more flexibility on your decisions, on your strategies. So like in this sense, it might work. Having a two retainer model, I think it's like a little bit like not a good idea in my opinion. These like market makers can like the competition between them, it's usually like playing. So you're providing the liquidity to both of them, and so it'll be just like you're trying to change the pockets, money from one pocket to another. So it doesn't really makes a lot of sense in some situations. That's why like having two loans market makers is like multiple market makers actually. It makes sense in some situations. Combining models, it also makes sense. So yeah, it might be give you like a the advantages in each situations if you combine them.
Yeah, yeah, that makes sense. And I also wanted to ask you about, your advice as it relates to actually choosing your market maker. Now, I'm sure you've got, your list of favorites or whatever that have a track record. But before I even dive into that, is there anything else that you think it's helpful for founders to understand as it relates to, making this decision, or just understanding market making as a whole?
So of course there's like some advices that I usually like highlight when I speak with a project, what they need to pay a lot of attention when we're speaking about like choosing the market maker. So first of all, as we already discussed, so it's very important to understand how each model works. It's very important to understand advantages and disadvantages of each model. Then, as a, like next step, so when you like understand the basic rules, you need to sit together with your team, with your like investors, explain like, okay, we have this situation for the list, and we have this list of exchanges, we have this list of backers. Our tokenomics look like this. So let's make a decision. What actually advantage from market makers do we need to use? What disadvantages doesn't really crucial for us. So you sit together with your team and make a decisions. Okay, what type of market maker we need when you make a decision, so you have a better understanding like where to look at. Then it comes, for example, you make a decision like go loan with loan and market maker. So right now you need to like choose with a really plenty of different like market makers. So for right now, for you, is like it's a very like I think the hardest moment. So you need to choose like the real companies that you can trust. From my side, I can definitely recommend you to speak with more different companies to understand their situation, their deals, their cases. The more you speak, the better it actually will help you to create some like understanding how the market works. Always speak, always check their cases. So I think their cases and portfolio is very important. Pay attention that a
Yeah.
lot of loan market makers can be like investors to some projects, but it doesn't mean that they can be like the market maker in this market. So check the real cases when they played a role as a market maker. It's also a good idea to speak with the founders. of these projects to understand like what was their experience, because coming to your example of your friend, so the experience wasn't really good. So if you speak with the other who actually already worked with this project, you can understand, okay, this was the problems. Is it important for our case? Is it relevant? Or probably we can not we can avoid it, to prepare to avoid it. um, and what I also recommend is to check contracts. So it's very important. So what have you all discussed, promised to put in the contract? So if it's not in the contract, it might be cases like after TGE, when some surprises will occur. And so it's very important to focus on how you prepare the contract. It looks very simple, but you can't imagine how many projects were like in the same situation as your friend, when this the whole KPIs and conditions are not put in the contract. So it's very important to have everything in the contract. And I can also probably give some recommendations, like red flags that you need to look at, as we like pointed in our like document article. So as we discussed, you need to find verifiable track record. So you need to look like their cases, speak with these cases. What else makes me actually doubt is unrealistic promises, because a lot of companies, they try to sell you and promise during the sale process a lot of things. And if you hear that like the guys are telling you something like unrealistic, like millions of profits, I don't know, like millions of FDVs, so huge volumes coming up. So it sounds very suspicious. So you need to understand that there is no free cheese everywhere. So if it sounds too sweet, too good, probably it's not in the end. So you need to speak with their cases and understand how it works. Also, be very careful with token allocations. So you need to understand if it's like loan amount. So you're giving them some amount of tokens. Is it enough amount? Provide them this amount of liquidity on your order book, but it need be, like always a golden mean. So you don't need to provide them too little, but too much. It's also like not a good situation. And also we as to avoid some cases with a bad history of bans violations, because I think we don't need to highlight it, but and tell the names, but there were like plenty of cases even the last year, when some like companies were uh having some legal problems, or having some problems within exchanges, or in some cases, or there's like some bad situation with some projects. So just like be very careful. You don't always know the truth, but be very careful with counterparties that have some like problems in the past.
Yeah, well, that makes sense. And you mentioned about, putting metrics and stuff in the contract. What are some of the big ones that people should make sure that they, think about, put in the contract and monitor once the token is live?
So first of all, it's all connected to the like market requirements that exchanges provide you. So it's like liquidity depths. So how much like liquidity should be like in each side spread. So like how tight in the spread should be. So all these metrics that we discussed, that the market maker is doing. So this is like work metrics. So you can place some specific KPIs uh like to meet them.
What about, we've talked a lot about sort of what people should be doing, and now let's say a founder is actually trying to go through this. Obviously, they can contact you for advice and things of that nature. But what resources are helpful? Whether it's like finding different market makers or trying to find something about their track record. Is there like is there anything on chain that's useful? Just curious about resources that founders might actually find helpful or useful at all.
That's, to be honest, like the whole problem, that there are some resources like Forest, for example, when you can like track experience of some market makers, track their like uh how good they were like in meeting the KPIs, as we just discussed, like spread, liquidity depths, and others. But in my experience, you would have a better resource rather than speaking with the projects who worked with this company. So in my opinion, like all this like statistics, it's good. It's like probably it's good to narrow down the list of market makers of companies that you want to partner with. But then when you have a very like short list, you can like speak, because you can ask your investors, you can ask like some of your advisors, friends, like who have projects. Always you can find easily somebody who worked with these guys, if who can like tell you like their experience, what was good, was not good, what were they happy, not happy. So just speak with as much other founders as much like investors or other guys who are like in the industry. I think this is like the biggest resource that you can use.
Yeah, I mean, I couldn't agree more. And obviously, this transcends market making too, right? Like, if you're ever trying to hire, a company or a person, and they can't give you three names of people who would recommend you, that is a red flag, right? Like, especially if they've been in business for a while. So, okay, very cool. And that's forged.com, right? So forgd.com. I think at least might be helpful for people to find, suppliers, and then from there they can do their own research and try to find people that those market makers have worked with and so on. Okay, that all I think is going to be super helpful for projects. And to sort of pivot into, let's say, the last part of it, and we probably won't go super deep here because we'll make more in-depth content around this later, but you opened up with this saying that, launching a token is not just about market making, right? It's a, multifaceted thing. And so we've also kind of covered how market making is not really a demand generating activity, right? You can make sure that you don't get screwed or that you don't mess things up, but it's not going to generate demand as much as, like, having distribution or having people talk about you. So what do you wish projects knew or founders knew when it comes to demand generation side of a token launch?
Yeah, so you're absolutely right that the market maker is just providing good conditions for a market. It's not bringing traders to a market. It's not creates volumes. I mean, like not creates like brings traders who will trade. So it all depends on yours. So the market maker's role is just to provide healthy market conditions to trade for traders. So that's the main point. As if we're speaking about marketing, what probably main advices I can give? So first of all, think that token and product are completely different things, because if you have a very good product marketing company, you have traction users, it
Yeah.
doesn't mean that these guys will come to your market and start trading. So you don't need to mix these campaigns for your marketing. You need to separate one and make a proper good one for your token. This is, I think, the main problem issues that I've seen founders making a mistake. So just make a good separate campaign for your token. It might be a little bit different strategies, instruments that might work, a little bit different KLs that you need to work with, a little bit different, for example, narratives that you need to focus on. So just think that the token is not well to your product. It's a little bit different goals that you need to achieve. So you need to have a unique way to for this marketing campaign. And the second problem that I'm also seeing quite a lot is founders overthinking, that they're like too big. For example, it might be like we're too big to go and provide all the details for exchange, or we are not willing to pay for some good KLs to work with. Like we are big projects, they need to work with us. So this is the real problem. Just think that there is, of course, there is like plenty good projects and plenty not good projects. But if we're just looking at like good big projects, there's also quite good a number of them. So try to make sure that you onboard the best exchanges, the best KLs, the best companies, like service providers, for example, if we're talking for the marketing thing. So this is, I think, the like biggest mistakes and my recommendations that like you definitely need to avoid if you're like preparing a good campaign.
Interesting. So there's we're too cool to, to pay for this, or we're too cool to work with, like, to hire these KOLs, like they should be coming to us. There's a bit of that mentality, you're saying.
Exactly, exactly.
Very interesting.
And in the end, the project is like all this top tier KLs. They're not like posting, they're not supporting, and like you have opportunity, but you didn't use it. So that's why just not overthink about yourselves. Try to make maximum the best what you can do for a marketing campaign, and like make everything that need for it.
Cool. Then final question. I'm curious about kind of coming back to this idea of maybe founders having one idea about something and then reality being different. So kind of like expectation versus reality. So in either direction, where a founder thinks some activity is super helpful, but in reality it's not, or the opposite, right? That the founder thinks, oh, this is a useless activity, this is not something that we do, but it's actually really useful. What comes to mind? Is there one, two, or three that you think there's like a mismatch there between kind of expectation and reality in general?
Yes, it's actually there's several things that I can like tell connected to these topics. So first of all, it comes how founder evaluates if the listing was successful or not. They try to look at some metrics that are not really relevant, and for example, compare their project or their listing with some other projects, just looking at the wrong metrics. In this case, I would also recommend to focus on organic volume. So it actually really shows how much it's how you can compare the launcher between each other. Of course, it might be some bad actors like doing some artificial one, but if you just compare the organic volumes, it really shows the level of the listing. So the more traders you manage to bring to your market, the better. So the more successful you are. Because if you're speaking about like ATH, FDV, it's of course it's nothing because it can be just a spike and like in 2 minutes the price can be like in a completely different level, or like a FDV. So you don't know like which selling pressure, how much selling pressure was on this project. So it's really hard to compare. So if you want to compare your TG and understand was your successful or not, focus on volumes. And on the other things that I usually often see is that the founders paying too much attention to irrelevant things that can't create that much volumes on TG. For example, some like small utilities of their token. So they want to implement some like unique feature on their product, and they are like
Right.
postponing the TG because they want to fight to finish it. But in fact, it probably might be a really good long-term utility and will long-term create a good demand. But if we're talking about like launch process, like day one of TGE, in fact, the volume that will come from this utility will be quite small compared to the volumes coming to the marketing. So that's why I always recommend, first of all, to do everything to maximize the marketing campaign. And in this case, it's better if you, like a founder, put your energy focus on trying to make the best marketing campaign rather than like trying to implement the very small features that will create demand like somewhere sometime later. Or some founders might postpone the TG after, for example, making like an IDO, for example, on Legion. But they don't understand, like the longer you postpone, the less traction, so the attention will decrease. So it's better for you to have the minimum gap to maximize the hype around like Legion sale rather than just like trying to implement this small feature. So this is also quite very common things that I see around the industry is around founders preparing for TGE right now.
Beautiful. Awesome. Well, I think we've definitely, well, I hope that we've been able to impart some wisdom to founders about market making, like why it's so important, right? It's not whether or not you should have one, like you definitely need one if you want to be taken seriously. We covered the loan model, the retainer model, kind of when it makes sense to work with either one, when it makes sense to have a second one. And obviously, we talked a little bit here about the things outside of market making, but we'll make some other content about that. So I think this is going to be super helpful to founders. As we said, many of them are kind of walking into this for the first and maybe only time. So I think it's good to have those. And we also covered some of the metrics that are useful to put in the contract, metrics that are useful to consider as it relates to like judging your own success and how to compare yourself to other projects. And with that, obviously, you kind of an advisor on this front for projects. So what's the best way to get in touch with you if somebody wants some help on this?
So I think one of the ways is like through you, through the Legion team. So like I'm very grateful that we're good friends working on some cases together. Also, I have a Twitter, so we can like send me a message at Twitter. I think you will attach it. So let's chat there.
Absolutely. Yeah, it's always great to get your perspective on launches and also helping projects that launch on Legion to make sure that whether it's the market making thing strategy or like the offers that they're getting from different sex listings and things of that nature, somebody like you who has so much data about also like the market's changing all the time, right? So what's a good contract today might have been a bad contract 6 months ago or something like that. So to get that sort of like up to speed recommendation, I think a lot of founders are getting a lot of value out of. So, yeah, that's it from my end. Any final words, Mike, or you feel like you've gotten it all out there, at least for starters, for people to get started here on their journey?
I think that we covered really many good points. Try to educate the founders a little bit. I really hope that it might be useful. It will be useful for some like founders and it will help them to prepare for better TGE. So yeah, hope that it will really help somebody. And thank you, of course, for inviting me. It was really pleasure to working together on this like article and participating in this video. So thank you for inviting me.
Absolutely. Thank you, my man. Thank you.